All right, so yeah, so I appreciate y'all joining on this. Basically, I try to specialize in VA loans. Yes, I wish I did even more, but uh, over the past 3 years, I've just really did a shift more. Well, I guess more the past couple of years. I've really done a major shift to just focus on VA loans. Yes, I try to do whatever else comes along, but VA loans are my specialty. I'm actually teaching classes to realtors now about VA loans here in Tennessee. It's they can get continuing education credit. I'm also have just started doing NARS military relocation professional certification. So I got a class coming up next week on that. That's an all-day class, and they get a certification for that. So I'm just trying to get out there and do that. But I was thinking that there's a great opportunity for us to learn about certificate of eligibilities on there. And there's just reading the form on there. There's everyone you pull can be a little different on there, but there's some certain basics to all of them. So just knowing what to look for on these will be great. One thing it's the cornerstone of the VA loan. Without it, there is no VA loan. So knowing what to look for, knowing how to calculate an entitlement on there, the remaining entitlement will go a long way on there. So again, and there are some lenders, one in particular, that will issue a pre-approval without even having pulled a certificate of eligibility. So sometimes there might be the opportunity where you can even save a VA loan just because of what we do here at Southwest Funding. We have a lot of yes, we can go down to 580 in-house, but we also have the brokers that can go below that, and one actually has no minimum credit score whatsoever. So that's kind of another aspect of the VA loan. But we have somewhere we have more opportunity because we have we have more opportunity because of just the credit score itself. I mean, it's some of the other lenders, they won't even touch anybody if it's not 640 or more, or they don't do manufactured homes on permanent foundation, or they don't do rehab loans. Well, we even though some of this we don't do in-house, we still have that opportunity to service others. So let's take a look over just the certificate of eligibility and what we're looking at. Basically, on first time use, full entitlement, non-exempt from the funding fee, it'll look like this. It's generally what a lot will look like here. It's just a basic, it's just a basic form. You see different sections on there. What we're going to do is kind of go through the different sections, kind of different things to look for on this. So, up there, you see the entitlement code, branch of service, funding fee. Underneath that, the prior loans charged to entitlement, which is nothing. And then underneath that, the veterans basic entitlement is $36,000. Total entitlement.
Don, your screen's not sharing. I don't know if you wanted to share or not.
Oh, yeah, that will be helpful, won't it? So, I thought I had already set that up. So let's do that. So yeah, I'm just talking.
That's better.
Yeah. Thank you. So yeah, we'll go back to the first one. So entitlement code, branch of service, funding fee, whether they're non-exempt or exempt, prior loans charged to the entitlement. The veterans basic entitlement is $36,000. Total entitlement charged to previous VA loans is currently shown as 0 on that, and then they've got some other things underneath that. So we're just kind of going to go through what these are. So entitlement code. Entitlement code is just basically, it'll show from where they qualify from on there. The branch of service, funding fee, whether they're exempt or non-exempt. The entitlement code of 10 means that they served during the Persian Gulf War period on there. So underneath that is, issued by, and then the issue date. Sometimes you'll pull these, you'll see that it's been previously issued. So, generally underwriting, may want it pulled within 90 days of closing. So when it's pulled, you may just have to go in and do a refresh, and there's a way to go in to update the, to show the updated pull date on there, because once in a great while is rare, but once in a great while it can change, and they might lose entitlement, or they've gone from active duty to now they're out of the service and they're a veteran now. So the funding fee, it'll show that they're not exempt from the funding fee. So first time use is like 2.15% on there. So that, that'll let you know what funding fee they need to be charged on there, for first time use. So also underneath that, underneath that, you'll see funding fee refund, and it says if you paid a funding fee at the closing of a VA guaranteed home loan and your VA compensation award provides an effective rating date that was prior to your loan closing date, then you may be eligible for a funding fee refund. So, they can contact the current mortgage servicer or a VA regional loan center and gives the phone number for that. This is great because every veteran that, basically every person that you talk to, you should be asking, are you or your spouse a veteran? Or have you ever served in the military? Great, one of them has. Next, the question should be, are you entitled to receive service-connected disability? Not are they receiving it, but are they entitled to it? Because just as long as they file for it prior to closing, then that is generally going to show an effective date prior to the prior to the date of the closed loan, which means that they may pay a funding fee at closing, but once they're approved, then they'll get a refund of that funding fee. I just recently saved a veteran, $10,000, for a funding fee, because I got them to go ahead and do their intent to file as soon as I started talking to them about the loan, and I pulled the COE and I saw that they were non-exempt. So I asked them, and a good thing on this is a lot of veterans may have tinnitus. A Marine Corps, most likely they were around loud noises. So same thing with any other service. So there's that possibility of tinnitus at the very least, but possibly more. Their tinnitus will generally be a rating of 10%, which will mean around $160 or so tax-free for the rest of their life on there. So you're helping the veteran by doing that, but just knowing this on there will be a great help. Hey, they may not be, they may not be eligible, may not be entitled to a service-connected disability. Hey, I was in the Navy and I was an aviation electronic technician, but I was in a building all day long that was pretty much just kind of like a warehouse type space and warehouse type workspace. And I wasn't around loud noises. So there was nothing that I could get a service connected disability for based on the job I did and where I did the job. However, if I would have been out on an aircraft carrier, if I would have been assigned to a squadron on there, yes, helicopters, planes, loud noises, I may have ended up with tinnitus. So you can always ask on that. Anyway, so let's, the saving of the funding fee, that can help you out right there. Just to ask them of those, two questions of, are they a veteran, or their spouse a veteran, or served in the military? And are they entitled to a service-connected disability, because you can get them on the right path. So entitlement codes. Here's a full list of entitlement codes. Generally, the most common ones that you're going to see right now. Hey, you may still. Yeah, I've done one where they were in World War II. Korean War, post-Korean War, Vietnam War. You'll see some of those. Entitlement restored. You'll definitely see that. That's code 5. Surviving spouse, you might see that occasionally. If they were a spouse of a POW MIA, there's that possibility. Entitlement code of 8 is post-World War II. 9 is post-Vietnam. Entitlement code 5, entitlement restored, and entitlement code 10 are going to be probably the 2 most common ones that you see on there. But you also have, selective reserves, which is 11 on there. So your entitlement code can tell you a lot on there. So let's talk about this now. What for first-time usage, they've got the basic entitlement of 36,000. 36,000 is 25% of the is 25%, and that's the loan guarantee that's guaranteed to the lender should there be a default. But there's also a bonus entitlement tier on there, and that is if they're current, if they don't have any entitlement, then they can buy a home for $5 million with 0 down payment and 0 monthly mortgage insurance. That's pretty sweet. But that's where this under the basic entitlement charge and total entitlement charge to previous VA loans we'll mention. Let's see here for some. Okay. Anyway, so it says veteran's entitlement for the home loan benefits of Chapter 37, Title 38 U.S. Code, subject to any conditions cited below. Basic entitlement available to veteran is 36,000. Entitlement previously used may be restored when the property is sold or the loan is paid in full. So that's, that will tell you some things there. For loans above 144,000, the maximum amount of entitlement and available to a veteran with full entitlement is 25% of the loan amount. As of 2019, there is no cap on the loan amount if there's not any entitlement currently being charged under that total entitlement charged to previous loans. If that's shown as 0, then they can buy any amount of home that they want to with 0 down payment. So for veterans who have previously used entitlement and such entitlement has not been restored, the maximum amount of entitlement available to the veteran is 25% of the Freddie Mac conforming loan limit, reduced by the amount of entitlement previously used, not restored by the veteran. The county loan limits are adjusted annually, and currently the county loan limit for most of the U.S. is $726,200 for a single family home. So keep that in mind. You can go to the on this slide, on the link underneath is a link for to where to find the county loan limits. Let me show. All right, so that's the website there. Can everybody see that all right? So, and then here's, you can pull up by different things, XLS, PDF, map, different things. Hey, if you want to go back to previous years and take a look at those, they've got that there. But here's a map here. Now you can see that most of the USA is 726,200. But there are areas, like in the Middle Tennessee area, Davidson and kind of surrounding counties, the loan limit is 890,100. So that's what we go by. Then different other shaded areas up in New Jersey, Queens County, it's a little over $1 million. Alaska, yeah, it's the same thing there. But just kind of depending on where it's at, up in Utah, there's Box Elder County is $744,050. So you can take a look on there and see. So that would be play a part into that loan calculation. If it's showing on there, but this first time use, it's shown as $0. So we're good with that. But keep in mind on there, if there is entitlement, and we'll see some examples here, then that's when you have to start doing some math. And hey, we're loan officers. We should know how to do some math. So let's do some math on this. If they've got full entitlement, there's no limit on the purchase price that the VA will give the 25% guarantee to. $1 million home, $5 million home, $10 million home. Once in a while you see $100 million home that hey, if the veteran can qualify, and the problem is okay, we as lenders, okay, how much are our investors going to be comfortable with lending, or any of our brokers? So that's what comes into play on that. But if even if on the total entitlement charge to a previous VA loan, if that's $1 or more, is now subject to the county loan limit for the county of where the purchase is at. So there's another thing on the at the bottom there of the certificate of eligibility. It's on every one. It says many states offer additional veterans benefits. So there's an opportunity to go to that, to the website there. And those benefits could include state or local property or vehicle tax relief for certain eligible veterans. So if you go to that HTTP, go.usa.gov WUQ5, then that will take you to the State Department of Veterans Affairs office locations, or you can search for that. I know when one browser that I tried to pull up that WUQ5 in, it didn't work. So I went to another browser and it took me right to where it was at. But that's a screenshot. You scroll down and then that's the individual states for it. But that's going to be on every certificate of eligibility. So it's just there, but it's something that you can give as a resource to your veterans. Hey, these are good social media posts too that you can do. So this is a similar one here, but entitlement code is 9 on this. Navy, go Navy, but they're exempt from the monthly. They get a service-connected disability with a monthly award on there. So it's still first-time use on there, but this will be showing us that entitlement code of 9, which that's supposed to be a non-error. So they're exempt from the funding fee, but this right here, it'll show you what they're getting every month as their disability, their service-connected disability award payment. It's on that one, it's $1,663. So since that's on the certificate of eligibility, you do not need to get the disability award letter. By the way, what's needed to even get the go get the certificate of eligibility? Well, really all you need is the social security number and year of birth on there. If you've got that, more than 80% of the time you can pull the certificate of eligibility. If it does not pull, then that is when you may need the DD 214 or their statement of service if they're active duty, their NGB 22 and 23 if they're National Guard, or other documents depending on how they serve. So active duty, you'll see a condition on there that says valid unless discharged or released subsequent to date of this certificate. So you may pull a certificate of eligibility where they're the active duty, but if they're going to be out of the service prior to you closing on the loan, then you will need to update the certificate of eligibility with the right information. That's what that's about there. Also, with active duty, if they have a pre-discharge claim pending with the VA, then you as a lender can contact the regional loan center of jurisdiction to determine whether the VA has rated the service member as eligible to receive compensation as a result of their proposed or memorandum rating. So if they have received it, then they're going to be exempt from the funding fee. If it's still, if their pre-discharge claim is still pending, it just kind of tells you what's needed. So if they have have received the proposed or memorandum rating on there, then might actually be able to get what their disability award amount will be, so you can include that as income on there. By the way, if their ETS is within 12 months from the anticipated closing date, then you have to see what their pay is going to be upon their discharge. So it might be needing a job acceptance letter, the retirement pay that they're going to be getting, what their expected disability amount's going to be. All of that will come into play, but it's 12 months from the date of closing. So on this one, subsequent use of funding fee, it tells you right there that they've used the loan before. So now the subsequent use of over 3%, or depending if they're going to be putting on a down payment, then that would affect how much that they're going to be paying. So now let's get into this one here this is an interesting one here. They've got an active loan that actually they have 2 line items on there. I've seen most I've seen right now is 3 that I've personally seen, but they've got lines for up to 5 there. So they've got 2 there. The first one shows paid in full, no restoration. Second one is showing as active. So their current entitlement is being charged as $96,500. So let's see about breaking this down here. $96,500 is what's currently being charged on that. But so we know that, hey, they've used it before. They're going to be charged a subsequent use funding fee of up to 3.3% if it's going to be 0 down payment loan. The paid in full loan, hey, they may have the loan paid in full, Well, they do have it paid in full, but it has not been restored yet. So what is the situation on this? Well, they may just, if there was not the active loan on there, then they may have, still be living in that home. But with that active loan, then that told me that, okay, they probably sold that home and it just hasn't been, that $36,000 just hasn't been restored yet on there. So, and the, entitlement code, showing us 10, they're showing us exempt on there. So on the conditions, it's showing paid in full loan. Entitlement charge on a paid in full loan cannot be restored until a veteran applies for restoration of entitlement. And it tells you what you can do, but on this, what I was able to do, it also shows that, hey, they're exempt from the funding fee on there. But, I verified that the veteran no longer had that home. It's not showing it in there. So what I did is I just submitted a correction on the VA's portal, and then we'll show that in just a moment. But let's do the math just based on this, showing 96,500. So we're going to do the math. So current entitlement charge 96,500. County loan limit, we're going to assume that the county loan limit of where they're purchasing is 726 200. So 25% of that, 726 200 divided by 4 is now the maximum entitlement that they can use for a zero down payment on there. So that's 181,550. So we subtract 96,500 of what's already being used from the 181,550. So that means that they've got $85,050 that they can use for their zero down payment. That means that they can, so we multiply that back out by 4. They can buy a home of up to $340,200 with zero down payment. Say that they wanted to do a home of $50,000 more than that, though. All they need to do is pay 25% of the difference on there. So the $12,500, if they were wanting to purchase a $390,000 home, $390,200 home, they would, the $340,200 is what they can do with zero down payment. Anything above that is 25% of the zero down amount that they can use and the purchase price. So now, Davidson County, Tennessee, it's got, and just to kind of that area, just moving one county over can get them more of a home. So county loan limit in Davidson County, Tennessee is $890,100. So that divided by 4 is their county loan limit. Their what their guarantee amount will be. 25% is $222,525. We subtract a 96,500 from that. That gives us $126,025. So now instead of that $340,200 purchase, they can now buy a home with zero down payment of up to $504,100 with zero down payment. So it is important to check what that loan guarantee amount is. Again, if it's blank, you don't have to worry about it. There's no limit. Don't have to do the math. I was like, okay, how much home do you want to buy? You're good on this. This is one of the reasons why it's important to pull that certificate of eligibility, because if there's already entitlement being used, and they've got they've got a $600,000 home that they're wanting to build. Well, with any one of these scenarios here, they're going to have to bring a down payment. And if they were expecting to not have to bring a down payment, then if they're under contract, that's going to screw them up royally on there. They may lose their earnest money, maybe lose their what they pay for the appraisal, home inspection, so different things like that. So that's why it's important to pull the certificate of eligibility and do the math. So now this is just where we moved that paid in full loan on there. So we just freed up $36,000 more. If you notice under the conditions, that got rid of that paid in full loan amount. That entitlement code changed from a 10 into a 5. Entitlement restored, what 5 is on there. So now, we're looking at, they've got a $60,500 of entitlement that's currently used and that's active. So, okay, it's that's a home that they currently live in. Do they have to sell that home? No, they don't. They can keep the home. They can move. They can rent out the home. They'll expected rental income, if it's in an area that can be rented pretty easy, then there's you can actually offset that mortgage payment with the expected rental income. Pretty sweet. So now so by just updating the certificate of eligibility, because hey, he sold this previous home, so why have that still on there? Let's do the math on this one. Entitlement charge $60,500, still the same thing. We're doing the math. $181,550. Remaining entitlement is $121,050. So now, instead of the $340,000, he could buy that home of $484,000 and change on that. So that's an increase of $144,000 that was zero down payment. So it's important to understand what you're looking at on these certificate of eligibilities and to make sure things are correct. So this was, it's paid in full, subsequent use. The reason why we can tell this one is paid in full, or that there was a previous loan, is because there's no prior loans being charged currently. But yet, if you look at the entitlement code of 5, entitlement restored on there. So that tells you that they've used it previously. Everything's updated on there. There's nothing currently being on there. So hey, this person, they've owned they owned a home previously, and they may still currently live in the home, but they've had the entitlement restored on there, so they can buy that $5 million home with zero down payment. But it also, under conditions, you're going to see subsequent use funding fee. So that's important. They're exempt. Surviving spouse. That's an entitlement code of 6 on there. What are we looking at on that? So entitlement code of 6, surviving spouse. It shows that there generally a surviving spouse is going to show as exempt from the funding fee. If for some reason it's not, then you're going to have to get with the VA on that to see what's going on. I haven't run into that. I've done about 4 or 5 surviving spouses on there. But also, if you have conditions on that surviving spouse, eligibility of the surviving spouse, and the validity of guarantee entitlement hereby evidence may be null and void if any change in marital status occurs after the date of the certificate and prior to the date a loan of the surviving spouse is closed. So generally, I think it's age 59 or something that for generally speaking, that they cannot get remarried until age 59 to be able to do that. So just be aware of that. It also shows on there that they receive a monthly compensation from the VA, exempt from the funding fee. So just be aware of that. So here's another scenario for a one-time restoration, no disposal. If you see like a one-time restoration on there, says entitlement previously used has been restored without disposal of the property. So they still own it. It's been paid on there, but it's not automatically restored. They can ask for restoration. They can keep it. Hey, use it as a rental home. Use it as a. They may have it as a second home on there, but it does say on there, any a future restoration requires a disposal of all property obtained with a VA loan. So if they want to be able to buy that $3 million home with 0 down payment, and they have this that they've already used on there, then they're going to have to get rid of the property, by sale on there. Foreclosure. Here's something to keep in mind on foreclosures. Foreclosures, it has to be 2 years since the date of the event and where it was recorded, out of the veteran's name. This one happens to have 2 on here. Yes, Tim, that was yours. But that they've got $45,127 that's charged to their VA loan of entitlement that's showing used on there. So that becomes important on there, but foreclosure, deed in lieu, that will always be on there unless they pay off that $45,127. Hey, they can start out with those smaller amount, $5,340. Hey, that can, that can add an, extra 21,000 to the home that they can buy with 0 down payment. So that's going to be, just be aware of that. That's going to be two years. So got the date of the loan on there, but what you need to do is to find out when it was actually foreclosed on, because it could have been one of those could have been foreclosed on a year ago or something. Well, they've got to wait for another year on there. So let's do the math on this one. Entitlement charge $45,127. County loan limit $726,200. I'm hoping that y'all are getting used to kind of seeing what this is, but it gave us a good opportunity since we're seeing different amounts here. Again, 25% of total guarantee, $181,550, which means that they've got $136,423 still remaining, and which means that they can buy a home of $545,692 with 0 down payment. If they're buying a home that's $100,000 more, then they got to bring $25,000 as a down payment. Again, must have been recorded out of the veteran's name a minimum of 24 months previously. see something like compromise on there. What that means is it's a short sale. So it's the same, it's the same thing, 2 years on there since the date it's been recorded out of their name. It can be done, but it needs to be 2 years. So on this, the entitlement charge, $82,614. Again, that is the amount that we have to subtract from the county loan limit, whatever the county loan limit is. And you'll see, under the conditions, compromise claim. Entitlement charge on a loan terminated with a compromise claim cannot be restored until VA's loss on the loan has been fully repaid. So, again, information about repayment of the loss may be obtained by contacting the regional loan center. Yes, you can do that. The veteran can do that. And also just to, there are some veterans that's actually paid back that entitlement that was charged, that they were foreclosed on or compromised. So that opens them up on there. So again, entitlement code 5, they're not exempt. This veteran here, we were actually able to do their intent to file, which they got approved, and then they became exempt. Let's do the math on this one. This one, we are going to assume the county loan limit. The entitlement charge is $82,614, but we're going to do Davidson County again, or one of the surrounding counties that has $890,100. So dividing that by 4, which is 25%, that's $222,525. That leaves them a balance of on their entitlement between the basic and the bonus entitlement. Again, there's 2 tiers on there. The basic is always going to remain the same of $36,000. The bonus will change every year. Expect to start hearing in a couple of months about what they might be changing it to. But still assuming the 2023 amount, that leaves us $139,911, which means that they can buy a home of $559,644 with 0 down payment. Anything above that, 25% of the difference. Yes, I keep saying it, but I want y'all to have that in your head on there. Again, 24-month time from when it was recorded. So we've gone through a lot of scenarios here, but I've got one more on this. You may see one that comes in about a prior approval. I've seen a couple of these on there. Entitlement code is 10. Their Army funding fee, non-exempt pension. Hey, it may come in at that they are exempt on there. Fine, they can be exempt. But if you take a look under the conditions under the funding fee, the veteran receives non-service connected pension income of $2207 per month from the VA. This loan must be submitted to the VA for prior approval unless the loan is for an interest rate reduction refinancing loan of a non-delinquent VA guaranteed loan. The pension is similar to like Section 8. The VA does have something that allows for kind of income-based extra help on there. They may already receive like service-connected disability, or most likely not on there, but they have limited income. But they do have to meet certain requirements. So basically, if you see this, it's like USDA on there. Underwriting will do their thing. They will get it cleared, and then they will send to the VA for the VA to approve on there, because this type of income, the veteran is supposed to be submitting every year their updated income information to the VA. So, the VA, if the veteran is applying for a home loan, if we have different income information than what they qualified with the VA to get this income, the veteran is in danger of losing this income and may have to actually pay back. So that's extremely important on there. So you can always let the veteran know on any of this. Feel free to reach out to me anytime on this. I'm glad to help. What we want to do is to always. I got tired of typing always, so I stopped that. Always ask for everyone, because it's amazing when you start asking this question here, how many more veterans you will find. Are you or your spouse a veteran? Or have you or your spouse ever served in the military? You ask that, you're setting yourselves apart from other lenders. In my class, there's a stat that I use that one third of veterans don't even know about the VA home loan. A third. And then there's almost half, a little under half, the lender never asked them if they were a veteran. So that's astounding to me, just astounding. So, hey, if they're a veteran, ask them if they're entitled to a service-connected disability. If you have the chance to dig in a little bit more. Yes, you may only do 1 or 2 VA loans a year, but still, you do this, you're going to start finding more veterans. The VA loan is an outstanding loan. To me, it's the best loan option out there for those who qualify. And those who qualify, active duty veteran, National Guard, reserve, surviving spouses, you have those that's available on there. And we can always come back and do another class about the VA loan itself and some things just relating to that. But always pull the certificate of eligibility as soon as you get the application in, or even earlier. So if you have the ability to go ahead and pull the certificate of eligibility yourself. I've been on the phone with veterans where hey, I'm here at the computer. It's like, okay, let me go ahead and pull this up. What's your social security number? What's your year of birth? Boom, we got that on there. And I always offer to do that. Hey, I'm willing to do it for every veteran, for everyone. So if you have any veterans that you want me to pull certificate of eligibility for, just let me know on that. I'm glad to do it. I don't care if they're looking to, purchase. They don't know when they're going to purchase. Let's go ahead and do that, because sometimes it just takes a day or two once we get the right paperwork in. Sometimes it takes a lot longer to get. So anybody have any questions on this? No questions? All right. Well, listen, I appreciate everybody that's joined in on this. I will have this, I've recorded this, so it will, it will be available in some format. Feel free to reach out to me anytime. I want to be able to see us to do other more and more VA loans on there. So again, thanks a lot. Y'all have a great day, and go get them.